Guys, you do not need a daily max loss or a daily profit goal or weekly or yearly. I think all of that is nonsense, and I'm going to explain. So obviously, you're probably thinking like, "Man, Austin, what the heck are you talking about?" I've been known to have big blow up days, and that's kind of been a good way to summarize my day trading over the last several years. Is my equity curve goes up and then it crashes down in the next couple days, and then I grind up and then it crashes back down. So I'm trying to eliminate big losses, and one way to do that is to have a daily max loss limit where once you hit that, you simply walk away. But I want to talk about why that is not how I trade typically. I have in the past talked about daily max loss, but I think I've been doing a lot of thinking over the past couple weeks and reading stuff and watching videos and just trying to rethink this whole thing. And here's the deal with day trading. Okay, everything that I try to do is based off of setups, based off of price, based off of patterns. And so the problem that you run into when you put a daily max loss in or a trade or a stop loss, right? You picture a trade where you take a trade and you're like, okay, I'm going to risk $500 on this trade. The problem with doing that is that if you risk $500 on a trade and that's how much you know that you're risking, then you're not exiting based off of what price and what the setups are telling you. You're exiting based off of P&L, or for that matter, if you are winning in a trade, the stock's going your way, you're up on it, and you're looking at your P&L and L and you're like, oh man, I'm up $500, I'm going to get out. That is stupid. That is so stupid because what you're doing there is you're capping your upside. Maybe you got out at the top, but it would just be coincidence. What you need to do is look at the setups, look at the patterns, look at the support and resistance, and that's where you need to make sure that you're getting in and out. But if we're talking about a daily loss limit, and I'm going to tie this all into the recap for today. This might turn into a bit of a longer recap here, but if you're talking about a daily loss limit, the only thing that's important is that when you're trading, you have discipline and you're taking setups that are high probability and you're trading based off of your edge. If you have an edge against the market and you take a setup and you're like, yep, this is my edge, there's no problem with that, no matter what your P&L on the day is. If you lose, if you hit your daily max loss and you come back tomorrow, the only difference is you may as well have just kept trading the next day. You may see a setup the next day that's better than if you had just kept trading. That might be the case, but you could also hit your max loss and then see a setup where you're like, this is my edge. I see my edge, but you can't take it because you already hit your arbitrary max loss. Well, I want to tie this into what happened today because I was in max loss territory for sure. I was multiple times going to walk away. And what I started to do was take a step back and just from a disciplined mindset, understand where I'm at. Okay. I'm feeling a little flustered, sure. But if you can identify that and you can have the self awareness, as long as you can still see setups clearly and see a setup and go and know why you're taking it. Are you taking it because you're emotionally charged and you want to, you're trading your P&L, you're down, you want to make it back, you're revenge trading? Or are you taking it because you can see that it's your edge? If you can identify the difference between those two things and trade purely based off of your edge and know what your edge is and take it when it matters, then forget about your like daily max loss. All of that is just a bunch of garbage because it might only serve to help you if roughly you know that at your daily max loss you start to get emotionally charged. But if you hit your daily max loss and you're chilling and you can see the market clearly and you're like, I know my edge and I'm just going to wait for the next opportunity, then you may as well, if it comes, you may as well take it, right? But, there's no harm in packing it up, going to the next day. But again, then you absorb that loss, which is fine. I mean, you have the loss either way, so you can take it to tomorrow or you can keep trading today. All I'm saying is you're at where you're at, and when the next setup comes, if you can have a clear head and you can take it, you may as well do it, whether it be now or the next day. All I think a daily max loss is good for is saying is a check-in moment where you're like, okay, yeah, check in with yourself. Am I emotionally charged, right? Am I at higher risk of taking something that's not A plus, that's not my edge? And so all you need to do is just be better, just be more disciplined, just don't take it if it's not A plus. All right, I'm down 500. All right, I'm down 1,000. This is where I'm at, but I'm moving on to the next play. That's all that matters. So that's all I'm trying to get across. Let's tie this into the recap now. I am going to go chronologically here, and I want to really get into this recap because this is a good one. So let's go to Tesla because that was the first trade that I took, and the whole reason that I'm talking about this today is because that was what happened to me today. I started off, I was down about 1,000 um, at one point. That was my low, but I started off kind of losing, and then I did take some trades I wasn't super happy with. But at the end of the day, I was able to sit and recognize where I was at, and then see another setup where I was like, okay, I really like this. I think this is my edge. I like the probabilities here, and even though I'm down 1,000, I'm gonna take it because I may as well be down 1,000 today, or my P&L is gonna say that I'm break even on my first trade tomorrow. What difference does it make? My account's at where it's at. It doesn't matter. This is my edge. I take it. So don't limit your upside. Don't limit your downside. Just trade your edge. Period. That that's all that matters. You don't hear that said anywhere. Everyone's talking about daily max loss, like pack it up, whatever. I don't. That's you know maybe that works for some people, but the way I look at the market is just in a purest sense of like just trade your edge. Period. Set your stops. Set your profit targets. Do what you do, and just do it over and over and over again. So if you lose 3 trades in a row, that's the cost of doing business. Move on to the next play. That's what I did today, and it worked out. So I'll show you. Um, Tesla was the first trade today. This one straight off the bat today, I was looking at Tesla and very happy with this trade, even though it was a loss. I'm extremely happy with how this trade was managed. So stock came up. I have my resistance at 198. This has been a level I've been looking at for a long time. All here, 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 a lot of levels in here. If you go break down the 15-minute and look at all this times it's touched that 198, 198 on Tesla. That is right where I've got my line drawn and where I see the resistance on Tesla. So it came up, missed it. I was like, oh, darn it, I missed it. It came down. I was like, man, I wanted the short. Then it bounced back up into the resistance. I was like, all right, well, it's giving me the real test here. So I got short as we rejected. Perfect, perfect. Love it. Got short. I think I took it right into the resistance, and then I added another 100 shares as we started to come off of it. Came up, rejected, starting to go red, flipping, rejecting here. I was like, all right, this is looking good. This is looking good. I was up a full dollar a share on this trade, but I was really looking um, for lower here, back down to 195 or so. I really thought this was going to reject. And I want to show you guys what the market was doing too, because all through here, the market was ripping up. The NASDAQ was just going straight up, and Tesla was weak, struggling, clearly a level here at 198. Then comes back up, tests again. This red candle here, I thought for sure, here we go. If the market had been dumping, if the market was weak, Tesla wanted to flush. I mean, I just saw it in the price action, but it just the Nasdaq was pulling us up, and I had my stop one tick above this wick here. 1 penny above that wick, that was where my stop was. So tight, but I think that's where it needed to be. Because here's the thing, guys. If you have a trade that you like, which I liked this one, and I was like, this is it felt right. I was like, this is the edge right here, 198. I like this resistance. I've been playing this level. This isn't the first time I've played this 198 level, and I really like it. It's a true level here. Clearly, there's reaction happening here. This is very clear to me. So I put my stop where it belonged, and I left it there. And you can think, oh well, maybe I should 198.50, give it, in case it wicks me out. Guys, if it wicks you out, it's doing that for a reason, okay? Sometimes it wicks you out and it'll come back down. That's the cost of doing business. So if it wicks you out, comes back down, you can take it again, but then you got to throw your stop back above that prior wick. It gets messy. So that's where you have to, make a quick judgment call. But I threw my stop up here and it came up. It's kind of interesting to look at the 3-minute chart on this because you can see, look at how many times it wicked up. Bam, 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 again here. And each time it flushes back down to VWAP. And each time I thought, here we go, here's the rejection. And ultimately it stopped me out. But you can tell this is really where my stop belonged, was right over that wick. Look how many times it didn't stop me out. And I've seen it so many times where it just comes so close, but the market will reward you if you just accept the risk. Accept the risk that comes with putting your stop where it belongs, right? Don't get greedy. Don't get have that fear of losing money. Oh, 198.01, that's where I'll stop out. Guys, levels aren't that perfect, all right? They need some room. Look at stuff on a higher time frame and you'll see it. But they need some room. They need some space to wick. But here it did stop me out, so I stopped out over that wick according to plan. So all that was according to plan. I took about $150 loss on that trade. That's fine. That was like great, fine. I mean, it's obviously a bummer. I would have liked to have a profitable trade there, but this was just cost of doing business. You don't win them all, but this was exactly what I wanted. Exactly what I wanted. So really, really, first trade was very clean. And then I think I might have traded AMD might have been my next trade. This one I'm not as happy with, but I got short as this to me looked like a little bit of a head and shoulders. I thought we might roll over. I did go short several times today in the middle of the grind up because I don't know, guys. When I do my analysis, I just thought we were going to end the day lower. We did come all the way back down, and I was making money on that move, but at this point, I took kind of big size. I should have taken smaller size and added to it. So I'm not going to sit here and say that my trading was perfect today. I mean, trading is rarely perfect. It's very hard. That's crazy. Trading to be perfect is pretty nuts. So if you top tick something, that's a rare occasion. But anyway, I got in this, and ultimately it did stop me out as we started to curl back up here, and so I took the loss on it, and it did move higher. But I was in this just for the kind of fade, and if I zoom out, you can see we had this resistance 101.50. So I thought we were kind of fading off of that. So I like the short on it, but the market just was really strong, and we were just pushing through. So ultimately, I got stopped out again on that one. And then Nvidia, I actually did take the long on this. This one was so choppy. Usually I trade Nvidia. This today was so choppy at the open here. This is the prior day. Here we go. Look at just how choppy this was. It was like relatively weak against the market. The market was going up, but it didn't at the same time it wasn't breaking down. So for the longest time I was just looking at it. And then I was kind of like, well, looking at it on higher time frames, you jump to a 15-minute something else. I just got that sense that, like, you know what? It's kind of bull flagging here. There's this big wick, whatever, but I think I can't explain it, guys. You watch price for long enough, you'll get it. But it was wicking around, being very choppy. But after I was like, it should have broken down by now. The market's going up. Eventually, it's gonna give into the market because if the market is one directional, trending in one way, and a stock is weak, there can be a detachment from the Nasdaq moving straight up and a stock that's relatively weak and not doing it. There can be that detachment for a period of time. But trust me, if the Nasdaq is ripping, 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 and Nvidia is just kind of lagging behind, that will change. At some point, it will give in to the Nasdaq. It will start to move up with other stocks. You just can't have it where the Nasdaq is just ripping, you know, up hundreds of points, and Nvidia is just sitting here like this. That's plus I knew that, like, I've been on Twitter, and even I tried to short it with some puts. I think I mentioned that in a prior video where in here I got short on it, and I was up momentarily, but then I took the loss on it. And even here I was looking on Twitter, people saying, oh, it's the short, it's going to break down. I mean, there's been this monster rally, people are looking to short it, but it just keeps moving up. So um anyway, so I got long on it, and I was up, and then I got out break even, and then I went back in, and I ended up taking a stupid loss on it. This is really dumb, but I was like, oh, I just think it's gonna go. Because I looked at these candles starting to pull away, and I just thought we were gonna start moving up. We did, but you can see it just made one last fall back down. Just too choppy to be trading in here. And if you're certainly, if you're gonna trade it, it's fine, but you gotta, again, put your stops where they belong. So it's not like I was perfect and did that every time. I was getting a little impatient. So my emotions were starting to flare up, but in the end I was able to recognize that and stay level headed. So I want to show you guys coin. or sorry, not coin. It was SQ. I always get those two mixed up. This one I had a trade on short, and I took big size here. Wicking here, and it had this big monster rally you can see on the 15 minute, and into that kind of red line. I believe that's a 20 MA or something like that. Um, so it moved up into that, rejected on the 15 minute, and I had this, man. I had this, but ultimately I stopped out for about a over 50-cent loss. So like, over 250 bucks I lost on this one, and it was like, oh man. And this is the trade that put me to down 1,000 on the day. So again, it's like I had the right idea. I joined in short on this big wick. I was like, okay, here we go. And it broke down. I was up like 50 cents on it. I was up like 250 bucks. And then I took the damn $250 loss on it, 270. As it wicked up here, I got out, oh 04, like toward the high, and I just, and it all just comes back to not having my stop where it belongs. So the problem you run into is you can be on the right side, but if you don't put your stop where it belongs, in all likelihood it's gonna come up and test the resistance again. And if it does, you're gonna get out because you don't have your stop where it needs to be. And so I didn't have my stop where it needed to be. I was over 65, and $65, that's just a whole dollar level. There's no, that's not good enough. So clearly there's a level here at like, 65 roughly, but again, they need some breathing room, and so it was careless. It was careless. I was it was of being afraid of losing money. That's what it all comes down to, is just being afraid of losing money, and just being frustrated, right? Just getting out. When if you just set your stop where it needs to be, accept the risk. If you're taking this trade, know where your stop's going to be and accept the risk. So what I should have done was taken smaller size and added to the position, and this trade management could have been so much better. There's no need to take an L here. This should be a winning trade. Look, we start to fade. I could have been in this trade. You guys know I hold trades for 20 minutes, 30 minutes, hour, up 2 hours sometimes. Today, I'll show you the next trade I held for multiple hours. So, I have the right idea here, but it's just because I took too big size, I didn't accept the risk. So you have to accept the risk. And what I mean by that is set your stop where it needs to be. The stop in this case, it really probably should have been, over, maybe I would just say it really needs to be over high of day at this point. It's just where it makes the most sense, I think. Um, and or if you look at the 15-minute chart, you might get a different idea. Maybe over this wick right here would have been. I mean, in hindsight, you can see that would have worked too. But anyway, put your stop where it belongs, and you're going to be so much better off. In this case, I didn't do that, and it cost me. It cost me. So if you're on the right side of the trade and you think you have an edge, don't try to save a few bucks. Don't try to save a few bucks by being like, oh well, I'll just get out, over 65. No, look at what the chart's telling you, right? Put it over, I would say the level if is, is like here, 65.26, right? That's 1 penny over this high. Look how these candles close under that. There's a bit of a level there. So play it here, right? So just this hurts to look at, honestly. So even here it came back up and then flushed, and then we started to move down. Man, with 500 shares, that would have been a really, really, really nice trade, depending on how long I wanted to hold that one for. All right, so let's move to the next trade where finally I lucked out. So Tesla, this one, I took a pretty big hit on this. This is where my emotions were flaring up, and I took a subpar entry here at VWAP, getting short. I thought we were gonna flush through. I don't know why. That was stupid. And then I stopped out on this candle toward the high, and then it flushed back down. Just super frustrating. And then you can see I got back short here, 197. And this is where I knew I was like, you know what? I don't think I have a good entry on this. And at this point, taking this trade, I was down $1,000 on the day, but now it's down on this stock too. I was down like 450 on this stock because this I took a dollar hit on this, and then here I took like $150 loss. So I was down like 450 on this one, and I knew I was getting kind of a mediocre entry here. But what I did was I started to zoom out, and I realized that although we didn't move off of 198 like I thought we did, we had these wicks yesterday and this kind of consolidation here around 199. So there's this kind of level, this additional level here at 199. So all of this I would just count as a supply zone. And so when we started to, what I did was I looked at the 15-minute and I noticed that this candle closed as a red doji right there at VWAP. And so what happened was I got short this 300 shares as this candle opened and we closed red here. And so I thought, okay, this candle closed red doji. I really like the probabilities that we came up. Yes, we broke out of 198, but we lost it pretty quickly. Within the hour, we lost that level. And I just thought, okay, I really like the rollover back down. I just don't see us moving up here. We've got all of this congestion resistance here. We spent most of yesterday under that level. And I just really like the fade move back down. I didn't see us ripping back up through 200. If you look at the daily chart, you can get a sense of what I mean too. There's some resistance as we move up into here. So if we're giving this back, I like the fade back down. So that's where I started to zoom out and just say, okay, I just think I'm right about this on a larger time frame. So I'm gonna play it again. So I did play it again, and this was a mistake to stop out. I mean, again, I just am not accepting the risk here. If you put your stop where it belongs, just a little bit higher here, 198.81 over this pivot high. Put your stop where it needs to be, damn it. Like this is ridiculous. I mean, this is ridiculous. I'm stopping out 20 cents off of where it probably really needs belongs. I mean, there's just no excuse for that. But it's encouraging to see that again and again and again and again, you see in the market, if you put your stop where it needs to be and accept your risk, it will work out. And if it rips up and stops you out here, there's probably a reason for that. So put your stop in where it needs to be and accept the risk. That's the last time I'm going to say it, but I'm talking to myself here really because I just, that's what I should have done. So I should have been in this trade still. I should have had the entry. I mean, even though I got short at this terrible entry here, 197.65, because I saw the close of this 15-minute, I thought we were going to flush through. In the end, we ended up testing again. And anyway, so I got this bad entry, but even though, I mean, it's still a better entry than down here. And this is where I should have been adding. I mean, I should have been adding. That would have been the big play, was to add another 200 here, size up to 500. Then my average would have been like 198 or better, and it really would have been really good. Anyway, all said and done, I got the bigger picture on my side. We did get the flush. Look at how big some of these candles get on the 15-minute. So what did I do? I wrote it down. I wrote it down. And look at this patience here. 500 shares short, and I'm holding through. 197 basically was the entry. Here we come down to 196. I'm up $500. I cut my loss on the day in half. Up 500 here, flipping green on the stock, and then wham, it comes up, and I'm actually red on these wicks here as we come back up. But I'm like, you know what? It's okay. I still think I'm right on this. We didn't break over this pivot high. Again, take the short up here. Set your stop above the last pivot. And once again, you wouldn't have gotten stopped out. So 90% of the time, like if you're right in the trade, put your stop where it should be and just accept it. I know I'm like saying the grass is green, but like sometimes when when you're emotionally flustered, it's not that easy. So anyway, wham, we come back down. At this point, I knew we were trending down, so I wasn't too phased by these bounces here. We bounced and then nice take profits down here, 100, 200 down here, 194.50 right here at this low of that low pivot. So that was excellent. Then I'm still holding 200 shares. So I was way sized down. At that point, I knew, okay, today, I've redeemed myself today. It just takes one trade, man. It just takes one trade where you can soak it, get some trend, see the move, see the play. Look at all time frames are aligned. If you can get that, if you can get that edge, you're good. So I just needed to avoid some of the losses from earlier. But, my trading today was pretty good. All it comes down to is not putting your stops where they need to be. AMD, that was a loser. Tesla on the first trade, that was an honest loser, but I'm happy with it. I'm relatively happy with AMD, not super pleased about it. Nvidia, that was a bunch of nonsense. And then SQ, that was going to be a winner. I just, again, didn't accept the risk. So if you add it all up and have just said, okay, we go back in time and did today exactly how I did it, except I put stops where they needed to be. I would have had a couple losers, but I would have had probably I think I would have had probably, maybe three winners, three losers, but the winners would have been big, man. That SQ and here on Tesla, take a look at this. So look at these take profits here. Wham, look at that. I mean, I got out as we started to squeeze back up here. This is only 50 shares, so that's only 10% of the original position, but still, you know, I've been known. I try to soak these moves, man. So even here, I was out 300. Here I was out 350. Here I was out 400. So from this point forward, I was only short 100 more. And that last 100, if you can keep 20% of the position on like I did, if you can really hold that, so that's 193 basically from here down here to where I got out. Let's call it 190 between these two. So 190 between these two, that's another $300 just on 100 shares, just on 20% of the position. So that was really nice. And then, in the past where I would let this go against me, I'm like, nope, nope, not doing that. So as it broke out above this pivot high, I'm out 190.57. I know it's only 50 shares, but still doing what needs to be done. Getting out 190.57 as we break above this one. If we break above this, you know, the writing's on the wall. The market's telling you we're starting to trend up now, so time to get out. So it started to look like we were rolling over, but it wasn't in the cards. And then look at that. Look at that. I mean, I know we had some news or something in there, and yeah, sure, we ended up coming back down, but then we closed the day, pretty high here, almost back at 193. So anyway, it's like I really feel good about where I'm at. I know, yes, I was down 1,000 today, but I redeemed myself from one trade where I made about 1,700. Because remember, I was down 450 on this, so 450 up, and now I'm at, up almost 1,300 on it. So it was a pretty big turnaround of like 1,700 bucks on that stock. So yes, it's unfortunate that the beginning of the day I took some losses, I made some mistakes, I didn't accept the risk or whatever. But if I had been like, well, I'm down 1,000, I should probably stop trading, I wouldn't have been able to come back today. And it all just comes down to, regardless of what your P&L is, it's just a number. It's just a number. What you need to be able to do is say, is just identify your edge. Identify if something is your edge or not. And if you can do that, take the trade, accept the risk, put your stop where it needs to be. That's it, man. And know your take profit too. I mean, know where your target is. Set your stop, set your target, identify your edge, accept the risk. That's it. That's all there is to trading, right? Because it's so counter to human nature. You just want to trade based off what your emotions are telling you. And I get that when you're down a lot of money on the day, it's more likely that you're unable to see your edge. So if you're one of those people that you just know that when you're down $1,000 on the day, you're no longer to identify your edge, then all right, yes, I can understand like why you have a daily max loss. Like I get that. But to just be like, oh, I'm down 500, but I feel fine, like I can see like to be like, oh, I'm down 500, and then look at a stock and go, oh, this is the best setup I've ever seen, and then just simply not take it because you're like, well, I hit my max loss. I mean, that just seems dumb to me. Honestly, that seems dumb, and I don't think anyone really says that. Nobody really talks about that. All I hear is like, "Oh man, you didn't follow your daily max loss. Like you're undisciplined." No, I just see my edge. I know what my edge is, and if I see my edge, I take it. Period. I don't, don't hesitate. Right? Set your stop, but it's not reckless, but it's seeing the market and just trying to, not see your P&L. I did not have my P&L up today. I really, for most of this trade, watching this come down, I was not really, I mean, I was flipping over to my P&L. I was watching my P&L, but I mean, I was, staying in this trade. I could have gotten out a lot earlier, but I didn't, because I had a target on it, which was roughly 190. And when we got to 190, I was watching the price action and thinking, well, we're not seeing a big bounce out of here, so I kept holding. And then the first sign of a big kind of squeeze as short sellers started to get out here, which was very clearly what was going on, I got out. And then I thought, okay, well, let's see if we get another leg down. And then the first sign of an uptrend, I got out, and I'm very happy with that. Very happy with that. So yeah, I'm honestly overall pretty pleased with how I traded today, but that doesn't mean that I don't have some room for improvement, obviously. I need to do a better job putting the stops where they need to be and just accepting the risk. And if that's the sooner and better I can do that, the more money I'm gonna make. Because right now I feel like I'm seeing the market pretty clearly, and we're getting some cleaner action. And yeah, I really feel like I'm in a good spot. I just need to just take good entries, take good setups, put your stop where it needs to be, accept the risk, and yeah, and you're good. You're good. All right, longer recap here, 30 minutes long. Whoa. Okay, I'm gonna stop it here, but I think there was some valuable info in here. I think this is a good one, and yeah, I will catch you guys in the next one. I hope you enjoyed. If you did, hit that like button, hit the subscribe, and I'll see you later.